When the economy takes a downturn, the stock market can be a roller coaster of emotions. But with the right strategy, you can navigate the market and protect your investments. In this video, we'll take a look at how to navigate the stock market during a recession. First, let's define what a recession is. A recession is a period of economic decline that typically lasts for at least 6 months. During a recession, the overall economy slows down, and unemployment rates rise. While recessions can be difficult to predict, they are a natural part of the economic cycle. It's important to remember that the stock market is not the economy. Just because the economy is in a downturn, it doesn't mean that the stock market will follow suit. One strategy to consider is to diversify your portfolio across different sectors and industries. This way, if one sector is affected negatively by the recession, your overall portfolio won't be as greatly impacted. Another strategy is to focus on value investing. This means looking for companies that are undervalued by the market and have strong fundamentals. These companies may be more likely to weather a recession. It's also important to stay informed about the economic climate and any potential changes in government policies that could affect the stock market. Keep an eye on interest rates and inflation, as these can also have an impact on the market. Remember that during a recession, the market can be more volatile, so it's important to not make impulsive decisions based on short-term market fluctuations. Have a long-term investment strategy in place. You can consider investing in defensive stocks, such as those in the utilities or healthcare sectors, which tend to perform well during economic downturns. It's important to remember that past performance is not always an indicator of future performance. Another strategy is to focus on dividend stocks. These are stocks that pay out a regular dividend, which can provide a steady income stream even during a recession. This can be especially useful if you are nearing retirement or need a steady income. You can also consider investing in bonds. Bonds are considered less risky than stocks, and can provide a stable income stream. During a recession, the value of bonds may fluctuate, but they tend to be less affected by market downturns than stocks. Another strategy to consider is to invest in emerging markets. While developed markets may be affected by a recession, emerging markets may not be as affected and may even perform well during a recession. However, it's important to remember that emerging markets can be more volatile and carry more risk. In addition to these strategies, there are a few other things to keep in mind when navigating the stock market during a recession. Let's take a look at some additional tips and considerations to help you protect your investments and make smart decisions. One important tip is to keep an eye on cash flow. In a recession, companies that have strong cash flow are more likely to survive and continue to perform well in the stock market. Look for companies that have a strong balance sheet and are generating positive cash flow. Another tip is to be prepared for market fluctuations. Recessions can be unpredictable and the stock market can be volatile. Be prepared for short-term market downturns and don't let them shake your long-term investment strategy. It's also important to consider your risk tolerance. A recession can be a stressful time and you may be tempted to make impulsive decisions. However, it's important to remember that investments come with risks, and it's important to consider your own risk tolerance and investment goals. Another tip is to not try to time the market. It's impossible to predict when the market will bottom out or recover. Instead, focus on building a diversified portfolio and stick to your long-term investment strategy.
Another tip is to take advantage of market downturns by buying stocks at a discounted price. This is known as dollar-cost averaging, where you invest a fixed amount of money at regular intervals, regardless of the stock price. This can help you take advantage of market fluctuations and buy low. Another thing to consider is to not let emotions drive your investment decisions. During a recession, it can be easy to get caught up in fear and panic, but it's important to remember to stick to your long-term investment strategy and not make impulsive decisions. Lastly, it's important to have an emergency fund in place. During a recession, it's possible that you may lose your job or experience other financial hardships. An emergency fund can help you weather these hardships and avoid having to sell your investments at a loss. Another tip is to invest in index funds or exchange-traded funds that track a basket of stocks. This can help you diversify your portfolio and minimize risk. Another thing to consider is to not let the news or media influence your investment decisions. During a recession, the news can be filled with negative reports and predictions. But it's important to remember to stick to your long-term investment strategy and not make impulsive decisions based on short-term news. Another strategy is to invest in gold or other precious metals, as they tend to perform well during a recession. They act as a hedge against inflation and currency fluctuations and can provide a sense of stability during economic uncertainty. Another tip is to remember to monitor your portfolio and make adjustments as necessary. This means regularly reviewing your investments and rebalancing your portfolio to ensure that it aligns with your long-term investment strategy and goals. One thing to keep in mind is that having a plan in place can help you stay calm and make rational decisions during a recession. This means setting investment goals, identifying your risk tolerance, and having a strategy for how to handle market downturns. Keep in mind that investing during a recession can be emotionally taxing. It's important to be aware of the psychological impact of investing and to manage your emotions.
In conclusion, navigating the stock market during a recession can be challenging, but by keeping in mind all the strategies, tips, and considerations discussed in this video, you can protect your investments and make smart decisions. Remember to always consult with a financial professional before making any investment decisions. Stay informed and up to date, continuously educate yourself, monitor your portfolio, and have a plan in place for how to handle market downturns. Additionally, consider investing in companies that have a history of paying out dividends, taking advantage of market downturns by using dollar cost averaging, keeping an eye on cash flow, and having an emergency fund. Don't let emotions drive your investment decisions. Consider your risk tolerance and have a long-term perspective. Additionally, be aware of the psychological impact of investing and seek guidance from a financial therapist or counselor if needed. By taking a holistic approach to your investments, you can navigate the stock market during a recession with more confidence and ease. Thank you for watching this video on how to navigate the stock market during a recession or economic downturn. We hope that you found the information helpful and informative. Don't forget to subscribe to our channel for more financial tips and insights. Thanks for watching.